Alright, welcome to today's session over here. Good, so as usual, what we'll be doing is to run through the markets, share some outlook, okay, and we'll talk about some opportunities, see if you guys have any questions along the way as well. We'll be able to take a look at the chat, and answer questions as we progress, okay? So this week, from Monday to today, generally the market has been pretty slow. I think typical, right? Monday usually movement is slower, but there are some pairs here that are already building up as an opportunity moving forward within the week itself. Okay, so we'll definitely want to keep watch of those, add them into your watch list, right? Because when price has entered a key area, that's where we want to really look out for the next stage, which is the setup itself, right? And then if the setup is completed, that's where we're gonna get involved in the trade. Okay. Last week on Friday, just as a quick recap, we managed to take the pound yen trade, and of course this Monday, we managed to hit targets on that. I'll run through a little bit on that as a case study as well, so that you can actually reference that, set up, the thought process in the future, and if you see any opportunities, moving forward, then hopefully that also give you guys kind of like a case study reference point. Okay. As of now, we do have the Aussie dollar actually active as well. Okay, I'll talk a little bit about that as we progress down the list as well. Okay, and then of course we also have the gold and silver um, in our list. Okay, good. So let's start off with the dollar index over here. Okay, so dollar index here, what we are seeing is that price is actually reacting and responding right now around that key area. Market has completed the three-wave structure, WXY. Okay, and of course what we also see here within the Y wave, we also have three wave very nicely completed, right? Fibonacci is there as well, the channel structure is there as well, and then of course right now the market seems to be reacting off it. Not really something very obvious at this moment. I would say it's still an early sign of the reaction, okay? Because the market can either still develop it as a correction here, the market can still develop as a crawl here, right? And of course the market can just decide to bounce up impulsively, right? So we probably just want to give it a little bit more time, right, to see how price is going to react moving forward. Okay, so to be very honest, the dollar index right now is just something that is worth adding into the watch list to keep an eye on it, but we really don't have a clear directional bias that we'll be looking out for in terms of the dollar as of today. Okay, euro dollar here, what I'm expecting is there's still a little bit of upside potential, right? We have this as again a three-wave structure. We haven't really taken out this high, which means that there's a high possibility we'll see price do that. Okay, it tends to kind of break highs and lows. We have the fib area here, of course, the channel as well. Okay, and of course, right now the market seems to be reacting lower, right? But this pullback here can eventually just be a correction and then one more push up, right? So that's very, very possible. Okay. So as of now, in terms of like euro dollar, I'm gonna maintain the bias here in terms of upside, and the projection is we're gonna continue to expect price eventually reaching for the 1.0565 or 1.0570 area. Okay, so that's gonna be still there in terms of the overall expectation. Bullish bias. Right now, obviously, we don't have a very clear setup on the lower time frame. Okay, but depending on how price is gonna develop in the coming days, we might get something as as price continue to develop. Okay, but for now, that's the view. Then we have GBP USD, very very similar to the euro. Okay, three wave structure over here. The only slight difference I would really point out here is that euro dollar price, the third wave hasn't broken the top, right? But you can see GBP USD here, this has broke the previous top. Okay, now what this means is that in terms of wave, right, if you take away the Fed, take away the kind of like channel, okay, we can essentially say that the third wave is completed, right? So we can see this as a WXY because this has taken out that. At the same time, this Y wave has also completed an inner tree wave. We can essentially say that this tree wave is completed, right? Now, why is that important is because when this tree wave is completed, we can then expect some sort of a deeper pullback, right? And the bias here would start to rotate, okay? And if today the bias is the expectation, right, or the understanding here is that, okay, this tree wave is completed, we can start to expect some sort of a pullback to the downside, that would start to open up the opportunity to sell it. Okay, and in fact, if you're fast and sharp enough, you'll be able to see that on the lower time frame, we do have a liquidity sweep over here as well. If the price actually starts to move lower, taking out that low, it will open up a sell opportunity on pound dollar. All right. So that's something to know, right? In terms of like understanding the wave principles. Okay. You can see the difference in that element of between the euro dollar and pound dollar, right? And I thought that would be something interesting that you guys will want to take away too. Okay, so it doesn't necessarily all the time require to kind of complete the flip. Okay, so again, bear in mind Fibonacci is not some hidden secrets. They're there just to assist us in doing a little bit of a forecasting, right? So give us some sort of expectation and target that we can work around with. Okay, so bear that in mind. This tree wave can be completed, right? And of course, if you measure the inner leg over here in terms of WXY, it has in fact completed. All right. So let me just very quickly maybe show you on the lower time frame for GBP USD, right? So the setup here is really based on simple SMC model. Okay. So what we have is, you can see price took out the high. Okay. Right now we can't really say that's gonna be a sweep of liquidity, but if price can actually U-turn, okay, and take out that swing low, then this would more or less be confirmed as a liquidity sweep, right? So we need price to come down, take out that low first, right, and then start to retrace. Then we have the model where we have a liquidity sweep with a change corrector break of structure or pullback, and then that would be our setup to take the sell, which then would be aligned with the higher time frame where this is the top of the third wave. Okay, so that's a little bit on the thought process and how we look out for setups and things like that. But for now, again, we just give it time, right? So moving forward, maybe tomorrow, maybe later today, if price can really take out that low, I would then move towards the perspective where this tree wave can be completed and then start to look for sell opportunities. Okay. Okay, then next up we have the Aussie dollar. Okay, so Aussie dollar here, overall direction is definitely bullish, right? We did get a pretty impulsive leg. We did get price breaking that top. Okay, but short term here, we definitely would want to some sort of expectation where price would do a pullback. Okay, and of course this also stack up a little bit, right? Today, if the dollar index starts to hit a key area and it starts to pull back, okay, Aussie dollar here would definitely move a little bit lower because of the dollar strength. So that's the part. That's the thinking. Okay, that's the thought process on Aussie dollar. Short term potentially pull back, and then eventually, we'll still be looking upside if the pullback is corrective. And that opens up the thought process today where we have this setup here for a sell. Okay, we have this setup here for a sell. Not really the best setup in terms of context, right? The setup is there. Okay, everything is fulfilled. Everything is valid. It's only the context behind this setup that is not like the most ideal. Okay, why would I say that? Is because you realize that we are just simply expecting a pullback because the market has kind of extended quite a bit, right? This area is not some sort of a key significant area. Okay, it's not like, oh, there's some fit cluster. It's not like it's the top of a channel. It's not like a tree wave has been completed, or sort of. Okay, it's just simply where the market has extended to the upside, and we are expecting a pullback, and we have a setup on the lower time frame. Okay, so if you kind of like, if for me, if I'm gonna grade my setup, like the best setup is gonna be S tier. This year will probably be more like maybe a B plus or A minus kind of a setup tier, right? Not the worst, not the best, but it's still a valid one. Okay, because at the end of the day, it's all about probability, right? We're never gonna be certain like what's gonna work out, what's not gonna work out. The thing is, we have a setup, we assess the risk, we manage it, you can accept it, then take the trade. So that's the thought process on Aussie dollar, right? Okay, so not an S tier kind of setup, but it's still a valid setup with the probability that we can expect some sort of pullback, right? So that's the trade idea behind it. Then we have the dollar Canadian. So dollar Canadian over here, we're kind of expecting some sort of a pullback. Okay. And again, this one here, it's quite similar to the Aussie dollar, right? Where we just basically have this extended move, and then we're kind of expecting pullback. But the setup on this isn't there. Okay, so we have a general sense of direction that we can expect, but we don't really have a setup. All right, so this one here, really nothing much. Just keep it as it is as of now. Then we have the dollar yen. This will be very much neutral. Okay, we have this impulsive leg down, impulsive leg up, and then the market just came back down. Pretty impulsive, right? So overall, I'm just gonna stay out of this. There's really nothing much to talk about. Okay, so whenever you get some sort of a V-shaped formation, we just give the market some time, okay, to settle down. So this one, nothing there. Then we have gold. Okay, so gold here, the simplest expectation forecast is that we are seeing some sort of a three-wave correction, right? WXY over here, can see that. Okay, so we are expecting the market to come back towards this key area. Okay, so again, understand it doesn't necessarily need to do that, but it's the simplest model for forecasting three-wave. Okay. What I like on this 4-hour time frame here is the fact that while the market is coming down here, we have a huge momentum move, right? So that's pretty impulsive on the lower time frame. Okay. So that's something to note. And if today you go down to the lower time frame, there is technically a potential setup. It's not an S tier. It's not the strictest criteria that is being fulfilled. You can see here, to be honest, this high wasn't really tagged. Alright, the price actually just tagged some sort of a low here, the closing price instead of the high price. So again, depending on how strict you want to be, right? So to me, it's not definitely an S tier as I mentioned, right? But it's still pretty okay, worth noting kind of setup. Okay, to give you the context on the higher time frame, this is what we're looking at, right? Okay, and of course, we kind of mentioned, right, this leg is pretty impulsive. There's a little bit of a order block over here as well. Okay, so overall, I think it's acceptable for this particular trade setup. Okay, and again, understand on a higher time frame context. We are basically trading the correction. Okay, so that's the idea behind it. Right, then we have silver. Okay, now if you compare the H4 on gold and silver, you can see a very, very clear difference, right? Gold, we are forming some sort of a pullback, three-wave, flag setup. Silver is slightly different because silver here we get a V, and then right now the market is doing a correction. Okay, would this eventually build into some sort of a head and shoulder pattern? Maybe. Okay. So this is something where if I go down to the lower time frame, there won't be a straightforward duplicate of the setup model, right? Because we don't have some sort of a liquidity sweep. Okay, we essentially just have a V-shaped formation, very nice impulsive leg, and then this seems corrective as of now. We can look to sell it if that's the case, right? So going down to the low time frame, you can see this setup is really lacking that element. Okay, it's just a very straightforward impulse correction, and then we'll start to look for it sell to give us the expectation of a three wave. So again, back to the question, right? Are you more like, you need to ask yourself, are you comfortable with such a setup, which is not 100% criteria is being fulfilled, but statistically and the probability behind the setup, it's still there technically, right? Yeah, so I just want to highlight, you can see like this three setups over here that we kind of mentioned as of today. They're all slightly different. There's slight difference between them. None of them are like solid S tier, something that I would really be confident and comfortable in taking. But they are generally still there, right? In terms of like there are some confluences between the higher time frame and the lower time frame. There are some minor factors that build up the setup there as well. Okay. Yeah. So hopefully you can again use some of this here to really see how thought process is. Okay. Yeah. So that's on gold and silver. Okay. How do we find order block? Okay. I'll use the. I will use. I think just now I can't mention gold. Okay. I'll use gold as an example to highlight that. Okay. It's not something very very complicated. Essentially, you can see here in terms of the candle formation, we have like bearish candle, and then there's this in between, a little bit of a retracement candle, right? The market is coming down, and then this is like kind of indecisive candle before the next continuation to downside with momentum, right? So again, if you go down to like even lower time frame, this is some sort of a pullback candle, right? So you can imagine the market came down, it does pull back, and then continue goes lower. Okay. So usually this kind of a retracement area is where the order block would often be. Okay. So the simplest thing here is you can see that as a retracement area, there's a retracement candle. You take from the low to the high, and then that essentially forms the order block area. Okay. So again, if you apply that principle on a higher time frame, okay. For example, here we have the up move, a slight pullback, and then the up move again. Okay. This here would form your order block. Okay, it's a pretty simple, straightforward principle. Okay, yeah. Crude oil, neutral. You can see how the price is, just not giving us clarity in terms of like biases in direction. So this one we're just gonna stay neutral. Okay, nothing much on that. S&P 500, we're gonna stay bullish bias, but of course, you wouldn't want to be buying at the top. You want to wait for some sort of a pullback retracement before jumping into the buy. Okay, so this one, really nothing there. Be patient. We have a clear bias, but just be patient for a setup. All right, we need to wait for the pullback first. Okay, then we have the pound yen. Okay, this is a trade that we managed to take last Friday. I mean, it triggered last Friday and then hits the target this Monday. Let me very very quickly show you. Okay, this one here. Right, so this is a setup, right? This is a very very classic setup, where we have the liquidity swept, the market came back down, we have the change of character, break of this swing low, and then the market pulled back correctively, right? Okay, so this is the part where we have that setup, right? I would show you what we are seeing back on Monday, right? Or I would say Friday, right? When we're looking to execute that. Okay. So the context of that particular trade setup is that we have this impulsive leg. We are expecting some sort of a pullback before another push up. Okay. Not something that is again like super S tier sort of a setup, right? Because again, looking at this as a top, there's nothing else other than the fact that this has made an impulsive leg up, right? Now, in terms of the details of wave, we can also see from this low here, we have a 1, 2, 3, 4, 5. Okay, so that give a little bit of an additional confluence where we are expecting some sort of a pullback. Okay, so when that all those things starts to build in, okay, that's where on the lower time frame, okay, on Friday, last Friday, we saw this, right, which is essentially what you see here. Okay, and everything was aligned, and the setup is pretty straightforward. We use a little bit of fib here, our entry, stops, and targets, and then the market tagged us in on Friday, came down. Okay, the market closes somewhere there, and then as Monday market opens, it managed to tag the target, right? So it's a very, very straightforward trade. Okay, the setup is there. I think the more important element is not just the setup, but the thought process behind the setup, right? Because the setup can be identified again quite frequently, but you don't want to just trade every other setup. You really want to have that additional layer where things starts to build up going for the setup itself. Okay, so I think that's something I would stress on. Okay. Quick question here I see is should the order block be above 50% only? Not necessary. I mean, if you start to layer things, yes, right? If you're looking at a sell trade, if the order block is above 50%, in terms of like SMC, then that will be at a premium zone, which is great. But if you're just purely talking about order block itself, right, and then you don't align, you don't want to stack too many elements on one another, right? You just want to talk about order block. Then by itself, there's no fit in it, right? You just talk about where those areas that market tends to have some sort of a reaction. Okay, yeah. So hopefully that's clear. Right, so that's on pound yen. So my take on pound yen as of now is I would love to see it come back down a little bit more. Okay, towards a key area, and then I'll be looking at buy setup moving forward. Okay, yeah. I mean, do we have a buy setup as of now? Again, I know. I just want to point out, right? You don't want to trade every other setup. Technically, we do have some sort of a setup here because you can see we have a liquidity, right? A break of flow. We have a change of character, break of structure here. Technically, we can start to look at this here and say that all right, that's a setup to be buying it. Okay, will it work out? Maybe. Again, it doesn't need to be a perfect criteria for trade to work out. It's all about probability. But the thing here is, would I be very confident in taking this trade? Probably not, right? Because again, I would expect at least a 50% pullback, okay, on a higher time frame. So my key area is somewhere around 190. Okay, if I'm gonna take this trade here around 191, then it hasn't really entered into my key area. Okay, so that's something that I think is important as well, right? It's not taking every setup you see, but you want to layer things on top of one another, right? You want to add the context behind it. Okay, so that's on pound yen side. Odd yen is more or less the same. We're kind of expecting some sort of pullback. If this is gonna continue correctively, then this would be a key area to look for a buy. All right. Okay, that's on pound. Next, pound. Okay, pound odd over here, we are looking at potentially price turning bearish, but I would personally want to wait for more confirmation, okay? Because currently price seems to be potentially, developing something more choppy around that zone. So for this pair here, I would really just be patient for now and see how things are going to develop first, okay? Yeah, so this one here probably gonna be looking at, I would say prioritizing the direction here is bearish, but not something I would look into like to focus on. Okay, so that's on pound. Okay, BTC has been testing that 618 area for a couple of times. Haven't really seen some obvious reaction back to the upside. But I'm gonna maintain bullish bias as long as this low is being respected. Okay, as long as that low is being respected, we're gonna be overall bullish, right? If you want to be a little bit stricter, technically price would need to respect this low as well. Okay, because then we'll be looking at this as a bigger low. 1, 1, 2, 3. Impulse, this will be a correction, so this low needs to be respected, and then the market needs to start taking off. Okay. So this one here, it's not the best one, right? Because ideally we want some really clear reaction when the market come down towards key area. We want a clear reaction to the upside. That's ideal. Okay, so the market attempted to bounce, but it didn't really take out those previous highs, right? So that's something that is telling us, right, the upside pressure is not very, very strong. Okay, so that's something to be a little bit more cautious on. Okay. Yeah, so those are the things to note. If you jump over to the indices just very, very fast to scroll through some. Yeah, to be honest, I don't see anything worth noting in the indices component, right? So probably the indices, there's not much that you want to pay attention to. Yeah, nothing there as well. Right. So yeah, I would kind of like say for the week as of now. I mean Aussie dollar is there. Okay, yeah, so a little bit of trade management, right? Today, if we can get the price to come down a little bit more, some sort of a 1:1. I mean, if you're risking about 15 pips, if you're making about 15 pips, then it's a good time to shift your stops, right? To break even and manage your risk free, and then see if the market can just continue to hit lower towards the target, right? Okay, so oftentimes the risk reward is about 1:2 for the fit settings that we use, right? So this one here, ideally we get to push a little bit more, we're just gonna shift stops to break even. Okay, so that's definitely one pair that's already running. Gold and silver, as I mentioned, are worth noting. Okay, yeah, the pound odd the pound yen, if you can come down into key areas, we can start to look out for the bounce. Okay, the bounce, and of course GBP USD as well, right? GBP USD here by tomorrow morning, maybe if we get the price to break that low as I covered just now earlier, that would start to build up some sort of a setup, right? If we break that low, the setup would not come to us tomorrow because we need to still wait for some sort of a pullback, right? If the market breaks that low, the setup would likely be somewhere around Thursday or Friday, okay? Because tomorrow, if it breaks it, we still need to wait for a corrective pullback, right? That would take time, so probably by Thursday or Friday, the setup may be completed, and then that's where the trade happens, okay? Okay, Cat Frank. Oops, just take a look at Cat Frank. Okay, the indicator that you see here is basically just a fractal indicator, right? It's just a fractal indicator. Okay, Cat Frank here seems something is building. 4-hour time frame, we do have price kind of reacting off the zone. Okay, we may be expecting a minimum of a 50% area, right? So that's still that downside potential. Yeah, so the bias is definitely downside for now. Okay, we have a decent reaction off here as well. If I go down to the lower time frame, yeah, this was previously a nice little setup, right? You can see the setup very clear. Liquidity sweep, break of structure, pullback. Okay, in fact, this one I think would be a very nice little pullback towards the fib as well. Okay, right, very nice little pullback. Okay, and then nice little reaction as well, right? So you can see the setup in play. But again, it's not just about the setup, but you can see we are entering a key area, right? So that's an additional layer that we'll look into, to add points into, the confidence level of this particular trade, right? And not only that, you can see the market has exhaustion as well, 1, 2, 3, right? Very impulsive late. We naturally would expect some sort of pullback. So having a setup in this area for the context of things increases the confidence on it, right? So very nice little setup there. Now, so moving forward, like what's next from here? Okay. So what we have, from a typical SMC analysis and process, this would be a break of structure. Okay. That would be a swing high. Okay, and right now the market is doing a correction, right? So we also understand on a high time frame we do have some room that market can still go lower. What you can also observe is obviously like some fab at the gap zone. Okay, and then if you take fibs from swing high to swing low, I'm just using a very simple 67 for a risk reward of 1:2. Okay, something you can consider. Okay, right. So I think if you're trading cat franc, that will be a decent valid setup. Cool. Cool. Okay. Right. So generally that's about it from my side for today. Hopefully again it's clear. Some insights taken from the session as well. Yeah. Okay, all the best for the week itself. And of course, let's see how the market is going to continue to develop. Moving from here, gonna keep you guys updated as usual. Okay, and I'll see you guys in the next live session. Yeah. Okay. Good night. See you guys next time.